I think the market has to go through its gyrations every so often. And when we had the unexpected comment by the Fed governor talking about how there's a possibility we could be seeing an interest rate increase by as soon as the end of 2022, I think that took investors by surprise. But then over the weekend, they thought about it and realized, well, first off, that's more than a year away. Second, it was simply a supposition. And third, if we end up having only 2 rate increases in the next 2.5 years, that's not very much. So I think investors were basically saying this is not something that we should have reacted to. And as a result, it represents a good buying opportunity. I think that as we head into the the new year, where with the economy opening up, et cetera, that people are feeling pretty confident that consumers will be coming back into the picture. So the consumer is coming back strongly. And if they, in a sense, because they have learned not to be spending too much money during the lockdown, they have cash on the sidelines, reserves that they can actually put to work. And so whether they do so in the form of retail purchases or investments, I think that will end up benefiting stocks in the market. The market is heading higher, then the retail investor will likely help to continue to push it higher, because retail investors in general are consensus and trend followers. So it's usually once the market has already started to decline that investors then decide to change their mind. So usually what we find is that the retail investor is more of a coincident or even a lagging indicator rather than a leading indicator. Cryptocurrency is definitely a very speculative investment. And I think that those people who do buy into any kind of cryptocurrencies, whether it's through an ETF or through a stock itself, that they should realize that this is money that they can afford to lose. Of course, it could be an opportunity very much down the road, but I think it'll be fraught with an awful lot of volatility. So investors, if they do buy into it now, have to sit on it for quite some time, possibly before they start to see a profit. Technicians have been claiming that it needs to go back down to the $20,000 level in order to finish out the stock patterns, but who knows for sure. So all I can say is that we are in the emerging embryonic phase of the introduction of cryptocurrencies, but it's probably something that will be with us for quite some time, yet the volatility is probably going to be unnerving for most retail investors. Well, I think that governments do want to make sure that if we do start to embrace cryptocurrencies, that there really is some basis behind it. I know concerns that I have heard is that, let's say, if you're online ordering coffee and you pay for that coffee with Bitcoin, it could triple in price by the time you come to make your order. So I think there has to be stability in price. There has to be a sense of conviction that this really is a store of value that people can use on a daily basis. And right now, I think it's just too early. CFRA raised its 12-month target for the S&P 500 in late May to 4620. But history basically says that after a very strong start to the year, 2021 is the 21st strongest 6-month return since World War II. And typically in the second half, the return is about 50% of the first half. So yes, we could end up seeing, instead of the 11% that we got in the first half, something closer to 5 or 6% in the second half. But because we are also heading toward the more volatile third quarter, I think there's a greater possibility that we could be seeing an increase in volatility in share price activity, at least until the fourth quarter. Our target for the S&P is 4620 12 months from now. But at the end of 2021, about 6 months from now, we think it'll be trading around 44.45. So when we made that initial forecast, the gain was for about 10% 12 months from now. So obviously about 5% 6 months later.